Hi, I'm Kepner CPA here in Dallas. If you have stock that has appreciated in value, you can donate that stock to a charity and get a charitable deduction. Let's say that you've got stock that you bought for $1,000. It's now worth $10,000. You donate it to the charity for $10,000 value. You basically get to deduct that $10,000, and you didn't have to pay tax on the gain from $1,000 up to $10,000. Great opportunity. But what if it's a stock that has losses? Let's say you bought it for $10,000 and now it's worth $1,000 and you want to give it to a charity. You're actually, in this case, better off to sell the stock so you can take the capital loss and donate the $1,000 of cash to the charity. So when you're talking about giving stock to a charity, you want to know whether or not you have a gain in it, which is a good deal for you, or a loss, which would be a bad deal for you. The charity gets the same thing. They get the value that you give them at that time, and then it's up to them as to whether or not they sell it or not. In the example where you bought it for $1,000 and it's now worth $10,000, and you donate it to the charity so you get a $10,000 deduction, the charity can sell it the same day and they end up with $10,000 in cash. So the charity is getting what you're giving, that is a value of $10,000. What you're getting is that deduction plus not having to pay tax on the gain. So you've turned a $1,000 stock investment into a $10,000 charitable deduction, which probably saved you whatever your tax rate is, so maybe it saved you 25, 30% of that. It's a heck of a deal. And you feel good because you contributed to the charity. You gave them their $10,000 worth of value. So when you're planning gifts to charities, think about that. I had a call from a client on the other end of the scale. They had a bunch of used clothing and household goods they wanted to donate to a charity, Goodwill, let's say. So she asked, well, what do I have to do about that? Well, the IRS says if you have under $5,000 of charitable contributions, you have to itemize what you purchased, what you bought, how much you paid for it at the time, when you bought it, and then you have to say what it's worth today. So I've had clients come in and bring me 15 sheets of yellow paper listing all the items that they gave, saying I bought this in 1995 for $800, it's worth $20 today, and listing all these things. So that's one thing. If it's under $500, you don't have to do anything. You just need a receipt from the charity. So think about it. If, let's say that you have household goods and clothing that you want to give to the charity, and at a thrift shop value it's worth $590. So your decision is, am I going to claim $500 and not have to go to a bunch of work, or am I going to claim $590 and go to the work and list everything that I bought, when I bought it, how I bought it, and then what each one of them is worth today? That's your choice in either case. I wouldn't use $590 on a tax return unless the client did the work of listing everything and it added up to $590. Most clients, taxpayers, don't really want to do that amount of work for an extra deduction of $90, which at a 25% tax bracket saves them about $23. So they would rather save the 2 hours of time going through all of that and it would save them more money in their own time than the $23 in tax that it's going to save them. So when you give to charity, it's a good thing to give if you give from your heart, but there's also a tax benefit. If you need help on this, give us a call.